The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday morning, and currencies are kind of running the show at this stage. If you guys have been in a coma, the euro has just gotten completely flambéed here. And I'm looking at it right now, and these are the levels we talked about yesterday. This 115.01 down below in the daily box. I actually listened to my show yesterday after we had talked about it, and after the euro had imploded. And I was using the word weird a lot. I was like, man, this is wild that this thing's hanging in there. It's seemingly bouncing off these unfair lows almost to the tick 115.01. The U.S. dollar is kind of not reacting in a north way, and we talked about getting outside of this area was going to be outside of a trading range. You had to go one way or the other. We actually reached a high yesterday, and I'm going to pull this up here, 116.51, and those unfair highs are 116.65, so almost to the tick up there, and then we kind of rattled around down here off the 115.01 and then finally gave it up. So trading the range was decent little proposition for a while, and then when we got outside, all bets are off, and then you got breakouts again, and that really was an unbelievable move, and still is actually. So what I want to do this morning, I want to see if Eddie's on the line with us. We want to get into these currencies and maybe give some people some help here. Ed, are you there?
Yeah, good morning, John. Good morning, everybody. Good morning, listeners.
Okay. Sounds like your mic's a little bit weird this morning. We're going to try to get through that. Okay, so you're in Spain, and you've obviously got a little bit better pulse on what's going on in the temperament of folks over there in reaction to this euro imploding. What's your general thoughts on this, and are we going to have any type of trading opportunities down here on the euro? I'm just flashing back and forth some levels here. Those are obviously on our scanner also.
Well, as far as the euro concerns, everybody's eyes were on euro, and everybody's eyes were on yesterday's ECB Draghi's comments of the QE, quantitative easing, and everybody kind of says, hey, yeah, we need a disappointment. That means that not enough funds would be injected, not enough bonds would be bought. And they've been talking about some bureaucracy, about how long it's going to take, like approve some purchases, so-called asset-backed purchases. I don't know which ones they are talking right now. They're not disclosing actually, but it was like only 10 billion a month. That's what they managed to do. But now, all of a sudden, yesterday, it was an announcement by Draghi that 60 billion per month would be bought. So over 1.1 trillion in the whole program. So it kind of got out of the window this disappointment stuff.
Right.
Therefore, that would lead to the bounce. So euro rally, that get bounced, never happened. And another technical thing, the shorts were kind of lighter. Therefore, all outstanding contracts were kind of ready to take this dive down. It's not like the market was oversold a lot and no more sellers were around. So fresh sellers came in, stops blew, and of course new level came in. But that definitely is amazing. But our profiles let us do. I tried to pick lows yesterday on these profile lows as you showed, John, on the daily profile lows.
Yep.
But just got out real quick.
Right.
And we regrouped ourselves because I was selling options in the corridor, and low end of the corridor was that box lows. But then, of course, we need to everything roll down real quick. And now we're adjusting the corridor. That was a play.
Okay.
Reasons I just explained, economical, technical reasons, of course. It's still short. Not even the new profile showed up. We'll see how price will close today.
Right. Okay. Well, thanks for that comment on the euro. So, one of the things that just blew my mind as I was kind of surfing around looking at these currencies, this is just not that one. Let me see where was that. Here we go. This is the one that just completely shocked me. The Canadian dollar versus the U.S. dollar. We're now at approximately 1.25 Canadian dollars to $1. I'm speechless. Actually, I'm stuttering talking that way. This is our closest right across the border situation here. If you ever want to take a vacation in Canada, now's might be the time to go on that train going across the Rockies to Banff over there. I'm shocked on this one.
I have a few words on that, John, if you might. Scanner picked up, short-term scanner picked up a couple of days ago, good opportunity to go long, 240s, and of course long-term scanner was already long, but short-term scanner gave me an opportunity to see what happened to 40s, and I actually went long. And I actually went long on it, but with a very narrow stop. Pre-announcement about but that was surprise decision from the Central Canadian Central Bank about lowering rates, and that was bringing it additional leg. And I had a very small. I'm sorry about it. I just gonna kill the phone.
Okay.
I just got a very small profit, technical profit there, and. He just run away, the straight run away right in the face. But at least we were on the right side, even though it was scary to buy on such a highs. But again, scanner gave us an opportunity. It was a very close, low risk-reward ratio situation, and we went long on it. But okay.
Okay, so for folks out there, basically what Eddie's saying in a nutshell, and it's kind of difficult to hear him this morning, is we're trying to use profiles again. We're trying to use the scanner for levels, and the good news is it basically, and again we talk about this all the time, but it basically eliminated one side of the marketplace, and that one side of the marketplace was the short side. So you had opportunities with the probabilities in your favor to only go long. You were only presented situations relative to the rules that we talk about, trading profiles, and some other indicators you may be looking at. But this is kind of the line in the sand, if you will, that says it's okay to be long, not okay to be short. And we have zero technical damage going on here, especially on the long-term and intermediate-term Canadian dollar. We haven't had any breakage of profiles here, and no technical damage. Here's the weekly. I'm just flashing these things across all time frames on the Canadian dollar. And I talked about taking a vacation in Canada. I haven't seen the euro this far down in a long time. The last time, I think it was not the last time I saw you over there, but I think back in I want to say the mid 90s, or folks, I used to always meet Eddie in Amsterdam because we always made an excuse to meet in Amsterdam back in those days. But I remember when they first came out with this thing, I think we were trading about 87 euros when I saw you over there, and you could get a lot done in Europe back then. I want to say we were also trading a guilder back then, right, the first couple of times I came over there. But and then I think the last time I saw you over there, you go to the airport, and I was just shocked. I think the euro was trading like 160, and everybody, all the Europeans at the airport, I was like, "What? Are you crazy? Is that the right price?" And they were like, "Yep, the good old days are over." Well, the good old days might be good again now. And where do you see this euro ultimately going, Eddie?
John, was a strategic level, was long-term chart level. Just set aside our profiles. It was 118, 120, right? Two times long-term bounces from their long-term support areas, and we sliced through it. So I would say, I don't know what the bottom is. Of course, the euro opened 87. You are correct, 87 cents to the dollar when the euro started trading. trading. But everybody's talking like below, on parity. It likely will be with this QE at such magnitude and 101.1 trillion.
Right.
No reasons, of course, to go long on this thing, neither technically, neither fundamentally. Parity is a long-term, of course, psychological stuff. Psychology always works, and psychological target. I'm thinking where to short this thing, to give it, please give an opportunity, any bounce in it, and I can see the 15 halves. Hopefully, it can go. The short term is a 13, 16, longer term.
Yeah, we talked religiously about the gift that keeps on giving, the euro, and we always talked about trying to find areas that we could rally back into to possibly get short this thing again. We were given a great one around that 126. You called that one. It was just a gift up there when we reached weekly unfair lows again, right back there. The middle of December. We just got a gift to go back to a major high probability area to get short. But, moving forward, I think that's what everybody's probably generally interested in. How do you gauge this thing? And, we were given some shorting opportunities at the top of the box yesterday, and we were kind of rattling around here. There was some shorter term trade against the long-term trend, bounces around 115.01. But remember what we kind of always talk about. I mean, the long-term trend is down, folks. And it's not reversing, and it will only reverse. I mean, and we have not had this at all on the plate since 135.52. If you remember, we came right off that weekly number. There it is, close below, go back and retest. That was in July this past year. That's where the technical damage started. So when I asked Eddie a question, I was actually very happy to hear your answer, because your answer falls in line exactly with, we don't know where the bottom is. Nobody knows. We've had some price targets that we've kind of, talked about, but until we start seeing technical damage on the north side on any of these longer term, intermediate term time frames, the bottom's not in place. I mean, there's, and let somebody else go in there and try to figure out where the bottom is by, they get a victory and get the low print, but they may have tried that about 20,000 times lately to try to get the low print to reverse this thing. But right now, we just have to let this thing kind of, do what it's going to do down here, and let some new profiles appear and wait for those new profiles to be breached on the north side, and then it might be okay to start nibbling down here. But right now, there's nothing to hang on to. And that's been the case for crude oil too. I mean, and we're going to get into that right after the break. Eddie, can you hang around?
Yes, of course, John.
Great.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. It is Friday morning and we've got a currency not war yet going on, but first hints of one may to come. Got Edmundus Catinas on the phone with us from Spain. Eddie, you still there?
Yes, John. Yes, John. My apology for my microphone. My girls just smashed it, and I'm talking from some spare one. So
okay.
I promise I'll buy this weekend. I'm sorry.
Great. I can't tell you what, I've got the scanner up right now, and we're looking at the currency grid here, and you know, it's right across the board. Most of these are benchmarked against the. Let's see, there's the Aussie dollar. Here's the. Where's the euro? There it is. There's euro. Okay. So, and there's the Canadian dollar. So the Canadian dollar, we talked about green across the board and zero reasons to go short here. Haven't had any red situations here in a long time on the Canadian dollar, and there's none yet. So it's not the time to be a hero, and in my opinion, relative to profiles, and try to pick that. And there's the landscape chart on the Canadian dollar. Boom. There you go. Just well above, and no reasons. As we say, okay to be long, not okay to be short there. And there's the euro. So here's the landscape chart on the euro, and we do have a 60-minute profile attempting to appear down here, but we haven't had that lock in, so we haven't had any re-gauging down here on the euro. So here's the short and skinny of it. Again, okay to be short, not okay to be long. On a contra basis, you may have some opportunities here at some point, but right now, just nothing to really lean on, so to speak. Eddie, we talked about the euro pretty much completely a while ago, but let's talk about something else here that's concerning.
Johnny, may I go a step back and look at euro? Just how to use it, that actually would be the good application of
Sure.
how to use the scanner. at this time, the new, as you pointed out, scanner shows 3 negative time frames. That means the daily, weekly, and 240. And on a bounce, if somebody trades euro, you can see there is a nearly 100 pips bounce, actually, whole basic point up. And the box, that means profile, is forming right now. So it's a very good time to look to sell into this profile. Profile is forming. And if you look at the profiles and the prices for those who has those tools, you can see the very low risk opportunity to sell euro 111.98, 112 zeros, and that was actually the profile lows. Okay, go ahead, John. I just thought it would be very interesting to point out the quality and the validity of scanner.
Okay.
Actually, what can lead you into the trade.
Let's take a look at our futures here, and I'm sorry to cut you off. Your mic is just bad, so we're gonna maybe have me talk about 80% of the time based on that, if that's okay. We're going to take a look at crude oil, and looking at crude oil, here's let's see what month we're in right now. Hold on, get into there. I think we have converted to March. Yes, we are. Okay, so this is something else. Again, okay to be short, not okay to be long. Looking at crude oil here on the long term, especially, this has been no change in events here. And here we are right across the board. Here's the landscape view, and here's the latest information on crude oil. And we talked about the XLE might be a better chance to kind of nibble on the long side than than going long the instrument alone on any kind of possibilities of buying this thing. But we had some pretty interesting things happen yesterday. Again, if you guys have been in a coma and not heard the latest news, the Saudi president leader, whatever you want to call him, 91, died. They were talking about that was going to be beneficial to crude oil. Well, that was kind of over quickly. And we basically, just no technical damage in the long term. We've gotten back below this 48.23 low, and now we're just kind of hanging out down here. And if there was something that was going to be, or any kind of positive bounce news for crude oil, that just was kind of sloughed off really, really quick. And there's crude oil weekly, and we've been in this mode since 100. And again, providing really good long-term breakdowns below 89. That seems like decades ago now, but this is the ugly, damnable truth of crude oil. And we got about 10 seconds before we go to break. And Eddie, thanks for all your comments today. I'm going to go ahead and get into some stock plays in a little bit here, and I'll be talking to you soon.
Thanks, John. I bet you would get me longer if my mic would be there.
Yeah, we'd love to. We'd love to. All right. Okay. Thanks. All right, guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's ye old S&Ps, and we got and closed above that 2027 area, and we've had our breadth turn positive yesterday. We talked about that. We just talked about it Wednesday afternoon, actually, on Tom's show, and we talked about that magical 2027 area being super important. We kind of got a little bit of a trading opportunity on the short side off of that, but again, you know, as traders, we got to go with what's presented to us, and we've got the leverage, obviously, that happened on the long side, clearing that, closing above it, and moving north. And now we've got this new profile that we've been focusing on here. This is our daily chart, 2052.82. Let's call it 2053. If we can get back down below there and close below there, we might be able to, you know, kind of use that to rattle around here in a trading range. But right now we've closed above 2052 yesterday, and we come back and retested it today with a low of 2052. So this is a great example of how to use profiles. Close above, go back and retest. We're kind of rattling a little bit higher here. We've actually been as high as 2062. So again, we've been a long ways in a short amount of time. In 5 trading days, we've gone from 1970 in that general area to basically 20, oh my God, what is that, 90 S&Ps, 900 Dow point equivalent almost. And right now, these are the inflection points to pay attention to. So caught some good moves. Trading against this breadth is in my opinion, not the greatest idea in the world. So you're going to have to, even on the short-term basis, have to start having some confirmations on any time frame. Here's the 240s that we're paying attention to. Again, 2051, 2052, 2053 is a big area for support. If we break that, we might have a short-term against the general information contra trade ability to take some shorts. But until then, really nothing to glean information off of. Here's our 60-minute off the S&Ps. Again, you got 51, 52, 53. These are all lining up as a breakdown point, technical damage in the interim. So that's going to be something that we may retrace back down to at the very least again. So that's the situation on the S&Ps. Euro seems to be finding some kind of footing down here, but I mean, my God, I mean, we're, it's not a key reversal type situation by any means yet. The dollar, talked about not shorting the dollar. And here we go. And that last 92.76 on for highs on the daily. This is where we're at now, up in the stratosphere, and not any new information on the 240s or anything. So we're just, again, the 240s have regulated the trade up. They could regulate the trade down if we get some new information on the daily and the 240s. And by the way, all that information is explicitly outputted in here. Here's dollar index futures, green across the board, as you can see. And it's okay to be long, not okay to be short still. If you can see that, that's the level of the market. No new boxes attempting to appear, so not a lot of new information going on there. Didn't mean to laugh. It's kind of funny in a way to me. All right, let's look at the DAX. We talked about not shorting this thing either. Here's the situation on the daily. Some guys are asking, hey, is it time to get in the short? No, it's not the time to get in the short the DAX. Simply put, no. No new information, no leverage. Don't be a hero, or don't try to be a hero with that product. And okay, somebody's texting me about a problem here. Okay, and just again, wait for some new information to appear. I'm not saying go a long way up here, but again, not the time to go short, in my opinion, when it comes to the DAX. This is what's okay. I'll take a look at silver in just a second. Here's the notes. This continues to blow my mind and continues to reinforce that I don't need to make too much sense out of things as far as fundamentals go and just trade the technicals. And the notes and the bonds are still a long play here. That being said, not going to go over too many of the specifics on that because I sound like a broken record. Here we go. Let's take a look at the metals. Gold really quick. Here's the situation on gold. We talked about this 1295 to 1303 area being somewhat of a resistance area, gathering area. This is the type of you want to see something get away from an area, and we kind of had that yesterday. We went as low as 1279 off of that kind of collection area at the top. But gold's wanting to kind of compress and consolidate up here, and this is the type of action you don't want to see from the short side. So we're gonna have to just kind of monitor that. I'm out of the gold market right now. Here's the 240s again, looking at it to regulate the trade up from 1200. Haven't broken stride. What a clean looking picture. First good technical damage will be getting closes below 1284 right now. And again, I'm kind of sitting tight on gold. Here's silver. Here's March silver. We talked about some targets above on the long term. Damn it, what did I do? Hold on. Excuse me. Well, let's just go right into the heart of the matter, as Don Henley would say. Here we go, 1833. That was a kind of a stoppage point, and we talked about that in an analogous type way with gold reaching that 1300 level. Silver obviously has been a little bit the weaker instrument here on a relative scale, but what do you do now? Here's the dailies. Remember, weeklies take precedence over dailies down the line. The numbers on the bottom down here, 1735 on silver. That will be the retracement point. And there's the 240s on silver. So when we kind of broke back, we always talk about this, is it okay to get back in the water? Well, it was okay to get back in the water above 17. And, that we talked about that for a long time. And gold was kind of doing its launching pad thing about the same time, kind of leading this thing up. But you've reached 1830. Let's see where we at here. I know we kind of poked our head above this level, but let me just state 18.303 for silver. We're trading 1833 right now. So again, a weekly close, today's close above this area will be super important. I don't want to do all these if. What do we do now? I know that's what you guys are interested in. I think, if you've had some longs in silver above this 17 area, you might want to consider that, this may be time to sit tight on silver. I like the fundamental reasons of buying silver and gold right now because this is nuts what's going on in the world. I mean, they're trying to drive inflation up in Europe, and there's no question about that, and allow themselves to compete. That in itself and all the uneasiness globally speaking would tend to, what actually does have value? Does paper have value right now? Obviously not. And can they manipulate markets? Yes. Is gold and silver, does it have intrinsic value in my opinion? Yes. So, all things considered, what I just said, we've reached a technical stopping point, and sitting on your hands for a little bit here after having a decent ride up in silver, waiting for a Friday's close. Today's Friday, I think, would kind of allow you to look at some inflection points, namely that 1830 area for a possible retracement on the long side. All right, that's the dissertation on silver. Let's go back to the XLF. This is something I've been kind of saying maybe it's time to stay away from this on the long side, and we had stops around 20 or a short opportunity 2370, 2379 that obviously blew through there. And I want to point this out because these things are not always going to be right. I don't normally try to show the things that are only right. This is one where we're wrong. And stops above, we always talk about putting stops relative to these inflection points, these high probability areas, and therefore this is something that I'm not interested in right now. And it's from the short side, and it's okay to be long, not okay to be short, but I'm not a big fan of going short this. So right now we're just out of this. We're gonna have to wait and see how this pans out. We're actually above weekly and daily profiles now in the XLF. So some of those trades, those are the ones that we throw in the didn't work out situation. All right, we got to take a look at natural gas for one guy who's been hammering me about this. I don't know if I need to even say anything about that. If you guys were looking at the screen, this is not a long at all, and it hasn't been. All right, XLE. Let's go into that because we've talked about this being the possible safer play when it comes to trading crude oil from the long side. But what have we done? We've caught a good bid above that 74.18. We've reached 77.21, or excuse me, unfair highs are 77.15. Had some nice little action there yesterday, but we're going to have again a Friday's close above all this, today's close, to look at this from a leverage point to go even higher. But you got to pay attention to crude oil, and crude oil looks very bearish. So we may have reached targets temporarily on the XLE. I'm thinking sit tight on the XLE right now. We got a decent little trader's bounce on that one, and don't look a gift horse in the map. I still got to look up that saying. I still don't understand it. Maybe somebody can tell me what that means. Okay, going back to the S&Ps, 2055, coming off a little bit here. We reached that 20. Let's just go to our 60-minute. We reached that pretty much to the tick. 2054 down here. We've reached the low. Looks like 2054. Yeah. So the 60-minute and the 240s are still intact. That 2051, 2052 area is still important for the 240s and the dailies. We've got to breach that to really feel good about this thing breaking down at all. But right now, that's got to be looked at as support. The breadth is positive, and as insane as it is that these things have rallied in 5 days, about a 90 S&Ps, they can go higher. And 2027 was kind of Custer's last stance on the shorts. as we still had a little bit of a mixed up breadth situation, weekly long and daily negative breadth, and now that was completely cleared up after we crossed 2027. So now it is what it is, and we don't have any help from this showing anything different right now. Okay, I just want to alert you guys also, we did put the let's get rid of that. We did put the ETF drill downs in here, XLU, XLY, XLK, the major ones, XLF, XLI, XLE. So you can come in here, you can see the ETFs as a whole. You can also drill down into the separate ETFs, and the paragraphs are going to be in here today. I know I've been promising that, but it'll basically allow you to see the story in a paragraph type mode on the basically same things that I say and talk about every day when it comes to some analysis. Okay. All right. Just wanted to alert you of that. And we're going to take a look at these grains. This is a big day for soybeans. We talked about this trade on March beans from around 1050, targets ultimately down below 983. Those were met. We rattled around a little bit. We're probably going to have a Friday close below that 983 area, and then the next targets down are 936. This is not going to be a straight line, but there's a lot of overhanging bearish news that's probably going to continue to come out on these beans. And I told you we had bought some 950 puts on this around 1050, and I think they're worth almost 20 right now, maybe higher actually. So again, here's the daily. I'm sorry, here's the daily. I was daydreaming again about soybeans. Here's the daily, and again, right now, the intermediate technical damage, as you can see, below the weekly M for highs, below the daily M for lows, and again, those targets and those inflection points now. As I go in here and clean this out, go back to futures, go down to beans, right there. There we go. There's the landscape view. And we're actually putting a bar chart in this thing now. Actually, next week, there'll actually be a bar chart. So here we go. This is the kind of landscape scene on here. There's that 983 area, and there's the 976 area, bottom of the box on the daily. Boom. There you go. All right. Sorry, I'm hung up here. Hold on. E-signal froze. Let's take a look at the euro, see what's going on here before we go to the next break in about 30 seconds. Okay, as Eddie was talking about, here's our 60-minute. This is probably prudent to look at this on a 60-minute basis right now, considering the implosion that's happened. Nothing new on the euro here. All right, and let's go back into the NASDAQ right before we go to break. A lot of guys always ask about this. Here's the inflection points on the NASDAQ. We obviously closed above. This will be the downside target for support right now, 4210 on the NASDAQ. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Kind of a currency related show today here, mainly because of all the currency situations going on, mainly the euro. Here's the British pound. Finally got that close below. This will be the retest area for more shorts to be laid into on this thing. 150.94. The British pound is now breaking down technically, and look at this. Had provided some great shorting areas based on these profiles, which are also within the scanner. We've been talking about all these, just kind of the gift that keeps on giving, and government leverage on some of these things on the short side, trying to deflate their currencies. No mystery here. The Australian dollar, similar situation, breaking down below 81.138, and now we're trading hundreds of pips below there. Nothing down here. The only thing I see on the Australian dollar is a little disturbing is this is our daily intermediate time frame, and we're making higher lows on Navigator pretty in a big way relative to lower lows on price action, but no new profiles to even glean anything off of there. And the technical damage that's just a suspect indicator. The technical damage is still just not a lot of things to lean on when it comes to trying to buy any of these things. So the trend is down. The long-term trend is down on a lot of these currencies against the dollar, and there's not a lot of reversal profiles, technical damage, or anomalies going on to think anything other than that. We're going to take a look at the S&Ps just to kind of sum up here before we end the show today. This is your big level here around the 2051 to 2053 area on the S&Ps. We just kind of came down and ticked that around 2052 pre-market. Again, you have to keep your eye on that. That's going to be the big area, and that will be definitely trading against the long-term trend to short below there. But you got to orient stops, in my opinion, around these areas. Got a good little range going this morning. But again, here's 240s. We get back into the fair auction if we started down south that way, and then 2027 will be the retrace area after that. But remember, the breadth is positive, and that's definitely contra trade south information. Just to re-sum up gold here. Gold kind of gathering itself around that area, that resistance area. And again, I would not want to be short gold right now. We're going to have some gyrations in it, but this was more than likely a resting area, targets for longs for right now, not to leverage on the short side against this area. Just kind of have to have a wait and see on gold here. Today's close is going to predict a lot on that one. Silver, similar situation. We just talked about that. And to wrap up again with crude oil, March contract, as you can see, pulling this up again, Canadians are not liking this. God, man, and that's a weird thing is, a lot of these guys have just stopped producing right now. That's going to be a little bit of a stringent situation on supply in general. But crude oil, technically speaking, this is a setup to head lower now. Playing around with fire here, in my opinion, trying to go long this thing. Not a lot of technical reasons to do that. All right, guys. Steve Rhodes is up next. And he is going to be going over some of the things he talks about in his newsletter. And I highly suggest watching that, as we will be back on Monday. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.